Hey guys, thank you so much for joining us today. We're going to talk about the 5 factors that make up your credit score. All right, guys. So, what factors affect your credit? Your credit scores are determined by several factors. And so we're going to go over that, but be sure and know that you have to pay your bills on time, and just know that understanding the factors and how they affect your score will definitely give you the most effective way to improve your score and move in the direction that you want to move. All right, so what factors affect your score? We already know that there are different algorithms that the 3 major credit bureaus have, which are TransUnion, Equifax, and Experian. And so they're not going to quite give us that formula, but we do at least know the 5 main factors that do affect your score. And so we can move within those parameters so that we can begin to make adjustments to our score in the direction that we want. All right, so these are your 5 factors, and as we know, we can't conquer what we don't confront, so just knowing this information will put us in position to be able to make better choices. So 35% of your credit score is based off of your payment history or number of payments. We're actually going to go over some different tactics that you guys can use. Please know that I am also on YouTube, where I do give some strategies on YouTube, and you guys can definitely check those out. 30% of your credit score is based off of your credit utilization, or how much you owe. And I just want to preface that with 30% is the max. This is one of my really big pet peeves with folks when they say, oh, 30%. Yeah, that's the max. You're not trying to be at the max. So we definitely want you at that sweet spot, which is 6 to 10%. And again, we do give you some strategies with that. But 30% is the max. 15% is length of credit. So whenever you hear people talk about don't close old accounts, that's what we're talking about. You don't want to close that old Hex account that you had when you were 18 years old, or the old Montgomery Ward's account. Believe it or not, I do still see that on credit. They have online catalogs, Sears, JCPenney's. I still see that on credit reports. So if you have those things, you just haven't used them in a long time, go make a small purchase, keep the account active, but don't close it. And then 10 and 10% are your credit mix and inquiries or new credit, however you want to look at it. So ideally speaking, you need about 7 lines on your credit report. And you don't want them to all be revolving. So you want to have some installment accounts, like maybe your car note. Definitely, if you're able to have an open-end account, that would be like your Amex or some other accounts. In new credit or inquiries, and as you know, lenders typically don't like to see about more than 4 inquiries. So if you have a bunch of inquiries that did not result in an account, holla at your girl. We can help you with that. But typically you want to be about 4 or less. And the timing, you don't want to look money hungry, like you're just applying for a bunch of stuff. Believe it or not, that does affect your credit. So let's talk about that 35%. Your credit report reveals your payment history, whether you've consistently paid bills on time or other obligations. So just know, and if you're looking at the Vantage, you were just talking about Vantage. If you're looking at Vantage, the way that they look at your payment history is extremely influential, whereas FICO is going to look at it as 35% of your credit score. And so really, really quick, I want to give you guys a micro payment strategy that will help you, since 35%, that's the largest of your credit score, is based off of your payment history or number of payments, another way to look at it. Then micro payment strategies are great right here. So if you, one of the things I definitely encourage you to do is to know when your billing cycle ends, because at 5 p.m. on that day, that's when that creditor is going to report to the bureau. And so you definitely want to make sure that those bills are in before that time. And so how I would do like a micro payment, let's say I have a credit card bill that has a $300 balance on it, right? And I really want to pay that balance off. I just got some extra money and I want to pay that balance off. So the way that I personally would do that is I would pay $100 today. I would wait about 3 days. I would pay another $100, and I would wait about 3 days, and I would pay that final $100, all within my 30-day billing cycle. What I just did was, number one, the system is going to calculate that as 3 payments. rather than one. Even if it was $20, it's still going to calculate as 3 payments, because they're not going to calculate a half a payment or a quarter of a payment. They're not going to say this was $20 on your when they report it. It's a positive activity, a positive payment that came in. It's going to report as a payment. And so that's how you effectively use the micropayment strategy. And also, by waiting a couple of days, you allow that to hit, to calculate, and then you're making another payment. And all of these are within your billing cycle, which is definitely going to increase your credit score. It's going to have a positive activity, and it's going to absorb your credit utilization, which is imperative. And I'll give you another little tip that you can do with your good credit while we work on your derogatory credit, which is if you have a credit card that you've had longer than 2 years, no late payments on it, definitely longer than 6 months, but about 2 years, no late payments within the past 4 to 6 months, balance pretty decent, give the creditor a call. And what you're going to say is, you're not asking, but you're going to throw that sweet on it, right? So you're going to give them a call and you're going to say, hey, Karen, I was looking at my credit report. I've been with you guys since 2019, no late payments. I was wondering, what type of credit limit increase do I qualify for? And then zip it. You don't need to let them figure it all out. Let them decide, let them go through their parameters, whatever they need to do. Sometimes we can talk ourselves out of things, because typically the first line folks, like the customer service folks, are authorized to increase your credit limit up to a certain amount without additional approvals or whatever their parameters may be. But typically, as long as they don't see any late payments in the past 4 to 6 months and your utilization is lower than 30%, and that's an easy way without spending any money. You're just making a phone call to actually improve your credit score and lower your utilization. I use this with my clients all the time. So just, and you can check out other strategies on my YouTube, but just, you guys are armed and you have this information. And so now that's one of the factors that affect your credit score. What you should do, okay? What you should do is you should definitely pay your bills on time. Just know that late payments are nasty, nasty, nasty boogers, and they will hurt you. So, set yourself up to win and not fail. Just know that you can set up auto pays, you can set up calendar reminders, and just like I told you to call that creditor, you can call that creditor and say, hey, due to the pandemic, throw it all under the pandemic. Due to the pandemic, I've had my hours affected. I normally, my pay cycle ends on the 18th. I wanted to request to see if I could have it end on the 26th. And usually, I don't know a creditor that hasn't been accommodating to something like that. And so that gives you that wiggle room so that you're not late, and maybe help you to align with your paychecks. You get it. So those are things that you can do to help yourself. That credit utilization, and we were just talking about that 30%. Again, that sweet spot is 6 to 10%. And the reason why that's the sweet spot is because when you're at about 6 to 10%, your utilization is actually helping to increase your credit score. It's actually going to help increase your credit score. So just know that you definitely want to be 30%, which is the max. So if you have a credit limit of X amount, just know that 30% of that credit limit is where you never want to have a balance higher than 30%. And if you do have a balance higher than 30%, then your first goal is to get your credit utilization down to 30%. And then, of course, you want to get to that sweet spot, which is 6 to 10%. So what should you do? Like I said, I recommend no more than 10%. You can try setting balance alerts so that once you're getting to that threshold. But the good thing about utilization that I really, really love is you can absolutely reverse it. As soon as you get it down, it will definitely positively affect your credit score. And so that's something that you control and that you can do for yourself. The length of time that you've had that credit, that's 15%. You guys, you want to grab as much as you can. So if it's just a matter of not closing an account, don't close an account. Do whatever you can to make sure that you are maximizing your points. So the length of time is definitely critical. I always tell people you clean first and then you build. So if you've cleaned everything up and you've started building and you are still struggling with that length of time, then you may want to possibly consider purchasing a trade or becoming an authorized user on somebody's really, really, really good credit. You don't want somebody's skeptical credit. You don't want somebody that may not, pay that bill in about 2 months, but then the other months they're good. No, you want somebody that consistently pays their, like great auntie that been in the government, that GS80, those type of people, your mom and them, grandma and them, great uncle, rich uncle. But if you need to purchase a trade, we have that for you as well. Credit mix. Again, we talked about that 10%. Being a good mix. So, you want to have, car payments. Self-lending is also a great thing to do. I always, especially young folks, self-lending is just awesome. Self-lending has different contracts. And basically what it is a loan that you pay yourself but gets reported on your credit report. So you definitely want to make sure you pay it on time, because if you pay it late, that will be reported as well. But it's great because at the end of the contract, that's your money. So it's a great way to save. It's a great way to improve your credit score and just get you in a great habit of saving. And of course, that new credit is that other 10%. So you want to be careful with applying for things. Definitely don't apply for a car right before you're trying to get a mortgage. We all know basically what happens. And if you don't know, basically what happens when you're applying for a car, the finance manager is going to kind of, for the best way I can explain it, is like throw it on the wall and see what sticks. So they're going to run you through all of their different lending options and see where they can get you approved. So that's not something that you want to do. You're going to take about, 15 inquiry hit when you go apply for one car at one dealership. So there are different options. Definitely, if you are affiliated with a credit union, look at getting pre-approved first so you have a check in hand. Talk to me if you don't mind. I'll give you a free consultation on how to go about speaking to the finance manager before talking to the salesperson, because if you know that, let's say for instance, your TransUnion is your higher score, then what you want to ask the finance manager is, what bureaus do you pull from? And do you have any lenders that only pull from TransUnion? Oh yeah, I've got 3 lenders. Okay, then those are the only 3 lenders I want you pulling my credit for. And you can actually write that on the bottom of the application. So now if we need to dispute anything, we've got something. But my point is, you have options and you want to know what your options are so you can function appropriately in those options. Factors that do not affect your credit. Okay, checking your own score. That's considered a soft pull. You cannot conquer what you don't confront. So you need to know where you're at so that you can use these strategies to help yourself, and just know that pulling your own score, like the young lady suggested earlier, the free annual credit report, those types of things, you can do that for yourself, and it will not, you will not take a hit on your inquiries. Rent and utility payments, unless, and the caveat is unless you're doing rent reporting, which is awesome, because if you are renting, you don't have a mortgage that you can file, that's going to be reported on your credit report. So now you have that rent reporting. That's one of your larger, between your rent and your car note, those are your 2 larger bills. So why not get credit for it? And likewise, if you're late, it's going to report. The same thing with utility bills. You can get that put on your credit, but just remember, you want to be responsible with it, because sometimes utility bills, if they go into too much late, they will automatically, if you're too late with it, they will automatically throw you into collection. So as long as you're being responsible with those things, absolutely add them to your credit so that they can positively affect you. And your income and bank balances, your bank statements, those types of things are definitely not on your credit report. So you have options. So we fix credit over here, obviously. So please don't hesitate to schedule a free consultation where we can actually put a plan together for you, whether you choose to move forward with me or not. But I also have a DIY credit repair course that may or may not be in your wheelhouse. I teach you how to fix your own credit and start your own credit repair business. But what you really may like is our DIY credit repair kit and digital planner, which is freaking awesome because it's you can download it. You can it has a debt tracker where I use the snowball method, which you can find that on YouTube, on my YouTube channel, that will help you track your spending, get a hold of your debt. I actually do have template letters in there for you. When you click on my website, you can actually see everything about the digital planner. It's just a one-stop kit. It has everything in there for you to be able to help yourself DIY, do it yourself. But of course, always you can schedule your free consultation. Let me figure out how to exit out. I think I'm done sharing my screen. I don't know if it went back or not. You guys can tell me.
Yep.
I have a question.